So I wanted to do a quick breeze through of the market, go over some indices, go over the indices, go over a few stocks and ETFs that I'm watching, and just explain why I think that stuff can probably see more of a pullback um, in the near term. So what we got going on here, this is QQQ, the Nasdaq tech stocks, right? So um, we got some bullish divergence here on the RSI, and you kind of probably missed that trade. What happens here is big money buys this dip for whatever reason. In this case, you had a crazy gap down off of war news and then a big gap up off of war news. Or I'm sorry, a big reversal off of war news. So we had bad news and then we had some good news and the market just started rallying. So a lot of people are going to come in and say, oh my gosh, I missed the bottom. What's likely to happen? Well, I don't know what's going to happen. QQQ could hit this supply side and break out, or it could hit it and reject. What I will say is, I believe it's going to hit it and reject. You got some anchor swing high anchor VWAPs that we still have not recovered yet. So you got to watch those. You got to watch price action. So if you have a fundamental reason to believe why you should be leaning bullish or bearish, then sure, have that thought process going into something and play the charts. So looking at QQQ, and it's the same thing with SPY. Um, it's the same thing with SPY. I don't see, you got the bullish divergence here. I don't see why it would break out, but if it does, then there go your bullish breakout. So you see what happens after that. We had broke those January lows. I mean, that was a bad sign. And this violent rip right here looks more like a short covering or just people taking profits on a lot of short positions. And then it gives the market room to breathe. So that's what I think is happening right now. I could be very wrong. And the only way we'll know is what happens when SPY and QQQ get to these supply sides of their channels and either break out or reject. That's when you want to get in so you know what you're buying. So I keep bringing up ARC. And like when this started to happen, people would be like, oh man, this done fell 30% off its highs. I want to buy it. Then you just chopped around from uh what's that, March of 2021 all the way to November of 2021, and absolutely nothing happened. The peak would have been a 20% gain, but who would have sold? Because you would have been this long-term investing, right? Again, you can trade anything. I'm more so talking about long-term investing at this point. So you hold, next thing you know, you drop again, you probably buy some more. And then what goes on from there is you just fall 45%. So what I said was, I'm not touching this because we all knew rates had to rise at this point. Um, but it wasn't that much of a big deal back then, really. And then ARC just chopped around, and then rates become a big deal, and it just flushes. Now that we got that out the way, I say, okay, I got this channel right here now. I'm on the demand side of this channel. I wouldn't mind taking a shot at it because now I know what I'm getting. Now it done flushed. Now it done came back to those pre-pandemic price levels. So I might have a good chance here. That's my thought process when I'm dip buying. I don't just buy stuff just because it fell a lot, because that's how you get slaughtered. So um, I don't have any ARC right now. I don't even know if I'm gonna buy any. I don't even know if it's gonna be worth the time. I truly just don't know, because at this point, I would love to hear more about the Fed's balance sheet and what they plan on doing about that before I take a shot at any speculative plays. And the reason I say that, I honestly would have taken a shot at ARC if I did not see this. Well, I'll back out of this. This is the banking ETF. So these are all your big banks. With rates rising, this should be going crazy. Instead, what we got here is, where's my path to? There we go. What we got here is this double top, an M pattern. See the M? I don't like that. And all it did was bounce off that neckline. That's a technical bounce. That's one of them violent bounces where people just taking profit on their short positions. The market started bouncing off of war news, right? So this was my personal way of saying, okay, if the banks can do good, then I feel good about the market. Even if it's pulling back looking crazy, I feel at least decent about certain stuff in the market. I said not everything. If the banking ETF was ripping and running and I saw ARK where it is now, I would say, yeah, I don't feel like we're going to no crazy market crash, or I don't feel like we're about to have another big pullback before, the rally. So at that point, I'm like, well, looking at this now, I'm like, yeah, I don't like this. You got this M pattern here. You are testing these swing high anchored VWAPs. So from here and from here, they both lining up right near that 39.34 level. And you go on a 65-minute time frame and you say, okay, why is that level important? Because a few weeks ago at the end of January, that's where we were seeing resistance at. That's where we're seeing that resistance. We break it, we bounce, we rip. Can't quite break highs. You pull back, you bounce again, then you just kind of chop for a little while. The Fed meeting minutes came out around this time, I believe. Yeah, right around this time, and it just flushes. Fed meeting minutes come out, you talking about rates, so banks should do good. In theory, didn't happen. What it did was it flushed a very key support level. Then it goes back to test these lows. This was a great bouncing opportunity, and I honestly missed it because at that point I was just taking profit on my silver and gold positions because they had gapped up like crazy, and I'll go to them in a second. They don't look good either. I don't even know what's going on at this point. So you had a good bouncing opportunity. So now people probably like, yeah, I'm definitely taking some profit here. So what we would see going into this week, you would probably think, oh yeah, I'm just gonna buy the banks. Don't work like that. What you see here, or what I see at least, is this shoulder. You got a head, and is that your next shoulder? Right? Is that your right shoulder? So what we have here is not a very bullish setup for a true bouncing opportunity. This could get very, very ugly for the banks. And if the banks can't do well, in my opinion, I don't see why or how the market tech heavy S&P 500 would do well, because tech is what's going to get obliterated, like ARK. So that's your most speculative, small cap tech. High cap tech, big mega cap tech have been doing well for the past few months, even in this whole raising rate debacle. But then everything just started to get ugly. So this is what I don't like about the market right now. And if I can't be bullish on the banks, then I can't really be bullish on anything long term. Again, anything is a good short to medium term trade because I have no idea what's going on. So you just follow these patterns and look for setups and let stuff make sense. So I had a theory that XLF was going to be at like $45, $50 by this point in a year, but it's not, just because the market been so weak. And here we go with a bearish reversal setup. If this plays out, that's going to be very, very bad in my opinion. So going to some trades that I like. First of all, Alibaba finally broke that support that it had, and you'll see here, if you're not familiar with the head and shoulders, this also had a head and shoulders pattern, which was not good for anybody expecting to bounce. You broke that neckline. Unfortunately, I didn't get to play it because it gapped down and broke the neckline. But where we at right now, that neckline that it broke is retesting it, and it is very, very likely that you're gonna see a smackdown. It's very, very likely that it's gonna get its wig knocked off and at least test this 100 level before it really breaks 110. So I would be expecting more of a pullback from this in the shorter term. We got this kind of wedge triangle thing going on here, and you can see that's lining up right in that neckline area. Something else that I'm watching is Draftkings. Um, like I said, man, I'm crazy bullish on Draftkings because it's like everybody sports betting and stuff, but for some reason the stock just been getting destroyed. So you got this channel here, which is, I mean, I want to call it a bear flag to be honest, because I don't have my after hours stuff on, but you would basically have your pole right here. So this would be your pole, and I'll color that blue. That would be your pole, and there go your rising channel. So I'm honestly short DraftKings right now, and I felt like this was definitely a short covering rally, so to speak. I think you will see more downside from things like DraftKings and stuff before any real bounce. And furthermore, it's up. First of all, it got down like so. It got down, say, 18% after earnings. Then this bottom here, from this bottom point here, it's up 30 something percent. That don't even make sense. But market never makes sense. You just got to trade what you got. So that I'm short DraftKings right now. So that's something that I'm watching, and that's probably something I honestly would be playing for quite some time. Just see how that goes. Something else that I'm watching is Pendulum Duo. It's kind of like a little step behind Alibaba. It's still holding its neckline. This support range here. You can kind of see the head and shoulders, right? You see it? Same thing. So there go your shoulder. There go your head. There go your shoulder. This is not good. Not good at all. So Pendulum Duo, if this can break above this pin bar that it had, I truly believe it could go back and test these levels. I did want to play a, a long position on a gap fill on Friday, but it had already gapped up and broke that level, so I didn't get to play that. So that's where we at right now. What's up? So then something else that I'm watching. Well, what I'm saying for this one is if this breaks this 47.5 level, probably see a lot of downside, and just be careful with earnings coming up. And that's probably it, really. And I did note to the group chat that IWM was the only index that did not break its January lows. So, like I had been saying, I've been crazy bullish on the Russell 2000 for this year in particular. But again, it's just been doing horrible, and I've been wrong for 2 months so far. But we'll see if that'll be the first to break out. And you got a lot more volatility in the Russell, so like I said, just wait for that break of the downtrend and know what you're buying. And if this can reclaim that previous support area that has been acting like resistance, then you probably see a big move in the Russell going into the end of 2022. So wait for more clarity from the Fed and just wait for breaks of these downtrends and tag some anchor VWAPs and see what price action looks like once you get there, and just roll with that. And until then, just continue to be an unbiased investor. And make sure you like the video, subscribe, and I'll catch y'all for the next one.